Today I'm over in North Bay Island here in North Bay Village. I only walked this neighborhood one time before this, and I don't think we really came over to this side of the island, so we'll check it out. Of course, it's super expensive here, but it is beautiful and it's quiet, and that's where we like to do the videos. And by the way, guys, I lost my little windscreen on the microphone before shooting this, so hopefully the audio is going to be good for you. It's not too windy out here today, so it should be okay. But just letting you know that if it sounds a little different today, that's why. And I have more at home, so it won't be a problem in the next video. If you look back over the last 2 years of where the stock market was then compared to now, pretty much every index is down. You do have some individual companies and stocks that are up, but most of the major indexes like the S&P 500 and the index funds that track it, as well as the NASDAQ, are all down. They're at a lower level than they were 2 years ago. And I believe it's all downhill from here. Now, let me just start off by saying that I am not a stock market expert, guys, but it is important to cover sometimes what other experts that do know the stock market very well are saying about it in order to gauge what might be coming, because when the stock market goes down, it has a ripple effect throughout the rest of the economy in the form of layoffs, in the form of lower consumer spending and buying, as well as companies going out of business potentially, and all of that leaks over into the housing market. So it is important to know what's happening with the stock market, whether you like it or not, because to me, it's just the world's biggest casino. But it kind of controls the financial direction of the country, more or less. But Albert Edwards from Societe Generale says that we're already in a recession, so he agrees with me on that, so I already like this guy. He's saying that the official US leading indicator tells us that the recession is a done deal. Not tomorrow, not next week, but today. And he also called the dot-com bust 20 years ago, so I guess this guy has some experience calling out these downturns before they happen. Now, what Albert's referring to is the US leading economic index, which takes 10 leading economic indicators and combines them into one catch-all metric. And that index now is at levels that is consistent when recessions have begun in the past. And if you check out this chart, you can see that every single time this index falls, a recession is followed right after it. And I think we have many things pointing to this, guys. You have the M2 money supply contracting. You have the unemployment rate at practically all-time lows. And every time you look at that data from Fred, you also see a recession shortly after that as well. And now we have this economic index that also points to the same exact thing. So there's pretty much going to be no way to avoid this moving forward. I would just love to see what this house actually ends up selling for, because they're asking almost $5 million, but they bought it back in 2020 for only 1.2, guys. Basically almost 1.3 million, okay? But still, they're asking like more than triple what they paid for this house. That is just insane and totally unsustainable. And their assessed value on this house is 1.5 million actually, and they're paying a $31,000 a year property tax bill. Just take a guess at what the new owner will probably be paying. Probably around 90 grand a year when they pay that price for this house. And it's not even on the water. Like most people point to, or that like to argue that there's no recession, is because unemployment is low. But all you have to do is look at history, guys, and look at the Fred data. That shows that every time unemployment is this low, it's followed by an uptick in unemployment as well as a recession. One thing that I had never thought of, which this is why I read these things to try to get smarter and share it with you guys, Albert Edwards says that you gotta look at, is even though the job reports and the numbers that they're giving people are strong and stronger than expected right now, the real kicker with that is revisions. They revise these job numbers down later on. And when they do that, the numbers actually are quite a bit lower than they originally stated, okay? So the job numbers added in February was revised from 326,000 jobs down to 248,000. The March numbers were revised from 236,000 down to 165,000. And here's another thing that confirms that this recession is going to smack us in the face and hard, okay? When you look at corporate profits and stock performance, Albert Edwards thinks that they have a very long way to fall right now. And he actually has some data to back this up, because when you look at this chart here, this shows profit margins are still elevated despite rising costs. And there's only one explanation by looking at this chart, because at a time when costs are going up, there's no reason that profits should be rising with it. But these companies are juicing their profits by using greedflation as a tactic. And we kind of covered this in a video previously, but basically what greedflation is when companies are artificially charging more for their products and services and basically taking advantage of this inflation situation. You see, consumers like you and me are well aware that inflation is a problem right now, and you're just kind of getting more used to and adapting to paying more for things. But what this does is it makes everyone broke faster. So in the end, they end up shooting themselves in the foot, because people will not be able to pay these higher sustained prices forever. And the other thing that this does, it makes inflation worse, guys. So that also means that the monetary policy that the Fed is trying to implement, maybe keeping interest rates the same for now, might not happen when their next meeting comes in June if inflation remains sticky, because it only went down barely anything. It was 5%, now it's at 4.9%. It was pretty much at a standstill as of the last reading. Yes, another flip. They bought this house in 2020 for $937 grand, and now they're asking $1.87 million, basically double what they paid for it just 3 years later. And some people might not consider selling a house 3 years later as a flip, but I kind of do, just because people bought these houses and now they're just trying to turn them around for a profit. It's not like anyone bought this maybe with the intention to live here long term. They're all just looking to cash out and just make as much money as possible, and it's just driving the cost of living here through the roof. And their property tax bill is $17,000 a year, which is actually on the cheap side, because they're only based on a $777,000 assessed value. So basically, the greed of these companies and the desire to keep their stock prices artificially high is good in the short term, but it's going to make things a lot worse in the long term, because it means we're going to have a longer and deeper recession, and the share prices of these companies are going to fall by a lot further if they would just take the hit. Similar to what the government did with printing the money. If we would just let everything happen the way it was supposed to during the pandemic and didn't print $6 trillion, we would be in nowhere near as bad a shape as we are right now. But it seems pretty much like human nature that greed will always prevail, and the corporations and the executives in charge are always going to opt to have profits now versus later, as long as they can cash out as much as they can at the moment. And whenever we do get hit with a severe recession, depression, whatever, then they'll be able to ride it out just fine, at least on a personal level, because they were able to take advantage of these corporate profits before everything just completely went downhill. CIO of Morgan Stanley, Mike Wilson, he said investors are overly optimistic about the direction of earnings and profit margins, and share prices are linked to profit margins, okay? He's saying that the S&P 500 will likely fall to somewhere between 3,000 and 3,300 in the next few months, and maybe recover by the end of the year up to 3,900. So that means a 27% drop in the S&P 500 potentially over the next several months. Mark Haffel, who is the Chief Investment Officer at UBS Global Wealth Management, he also said this week that the stock market doesn't seem to be pricing in the downside risk sufficiently. And they think that there's a high probability of a near perfect landing for the US economy, which is basically counting on the fact that nothing's going to break and it's all just going to recover and go up from here, guys. And I don't know how anyone can be that optimistic right now. I know it's nice to think that way and hope that things like that will happen, but being realistic about it and betting your future on it is another thing. And this is what he said. He said that considering the pressure on sales and margins right now, look for companies to look for ways to cut costs in the coming months, weighing on economic activity and financial market performance. So once again, this goes back to companies cutting back. What does that mean for you? It means if you work there, you might lose your job, is what it means. And he also says that the labor market meaning the jobs, is a lot more likely to fall apart a lot quicker than most people think once the credit crunch really ramps up. And there's just so many things, guys. We have the debt ceiling standoff in Congress. We have more bank failures potentially looming ahead. Inflation still sitting at 5%. And apparently the number one thing we got to look for right now to see where things are going to go is payroll revision, to see how much they're wrong about all the new jobs that are being added every single month. And that will really show the real picture of what's going on. Here we have just an empty piece of land, just a fraction of the size of a football field that costs $2.5 million. And it used to cost $2.8 million before a price reduction. And of course, they have all the beautiful plans of what it could look like. Probably gonna have to spend another $2 or $3 million to build that house. And the annual property tax bill, as of right now, is about $23,000 per year. You keep reminding me, so I will keep reminding you, because you're reminding me, to subscribe to the channel. Like the video, guys. Help me get to 100K subs so the channel gets verified and you know you're talking to me instead of some scammer in the comments, because I never scam my audience. Once my channel reaches 100K subs, I'll be able to be verified and you'll know it's me because I'll have the check mark next to my name. And the other thing is, if you actually like the video, it shows YouTube that you actually really enjoyed the video and they might share it with more people. So if you like my channel and you want to see it grow, those are the best things you can do to help. Now here's something interesting. Because inflation is so out of control, it's kind of a surprise to see this right now, that summer flights in the US right now are 20% cheaper than they were a year ago. And to me, what that means is that they need to get bookings right now. A round trip domestic airfare ticket right now is on average $306 according to Hopper, and that's down 19% from last year when the average ticket peaked at around $376 for a round trip ticket. But they're saying it's not the recession, it's not that we're desperate, it's because jet fuel is cheaper now. Last year it reached $178 a barrel and now it's around $90 a barrel. So that is a legitimate excuse, I suppose, that airline tickets are cheaper and they can afford to cut back on what they're offering in terms of domestic prices, because they really get you right now on international flights. Because if you want to fly to Europe or Asia right now, those tickets are anywhere between 36 to 62% more expensive than they were a year ago. They're basically taking advantage of this because more people are traveling internationally now that things are more opened up. They've declared the pandemic to be over, all of these things. So people are starting to go back out on these long international trips right now. But honestly, regardless of the reason, guys, I'll take anything that's cheaper right now. You know, it's nice to see something less expensive than it was a year ago, because that's pretty much not the case for practically everything right now. So at least if you want to take a trip across the country or just go see some family or get away, it's a little bit cheaper than it was a year ago. And any sort of relief to me is welcome relief right now. We just talked about the inflation numbers, which recently came back at 4.9%. Last month it was at 5%. So down just 0.1% from the month before, which is not much of an improvement, and still means that prices for things are still 4.9% higher than it was a year ago. And back to the stock market, traders are betting that there's less than a 10% chance that the Fed will raise interest rates again at their next meeting in June. But it is just an estimate that they're going to pause in June. There's no guarantee right now that there is going to be a pause. That's just what they think is going to happen. They're even going as far to say that they'll start cutting rates come September once the recession actually hits. Now, I don't know, guys. Nobody ever knows what the Fed is going to do, but there you go again. These traders being way overly optimistic about where the economy is headed right now. This house has been for sale since last November for almost $1.6 million. Then they took it off the market in March for a couple months and then just relisted it like a day ago for $1,480,000. And it's funny because I don't know why people do this. Maybe they think it's going to look like a new listing to some people that haven't been paying attention, but it's still extremely expensive for an old house, and the property taxes are $13,000 a year right now, and you can bet that is going to go far higher for the new owner. Me personally, I'm sticking with my motto that I learned in Boy Scouts of prepare for the worst and hope for the best. I think that's the best plan of action with everything right now. So that's what I'm personally doing. You guys can do whatever you want. I'm not really a gambler, so I'd rather hang on to what I have and what I've worked my whole life to build rather than risk it all over optimistic hopes of the future, if you know what I mean. Now, as a millennial, I especially couldn't believe this when it comes to retirement, and that is the oldest millennials were born in 1981, and those millennials will be eligible for Social Security benefits already starting in 2043, which is still pretty far away, but it's not as far away as it seems like. But here's the problem. Most millennials think they're going to need anywhere between $3 to $4 million to retire comfortably, and most millennials have nowhere even near that. Let's say you're a millennial and you're one of the lucky ones that does save enough to retire in your late 50s like that, and you're able to save 1.8 million for retirement. That gives you a 30-year window for retirement where you'll be able to have about 60 grand a year, and that translates to about $5,000 a month. And even though that might sound good right now, I look at it as like, how much is 60 grand a year really gonna be by 2043 in terms of purchasing power, guys? You're seeing what's happening with inflation and how expensive everything is right now. What's gonna happen by 2043? I think $60,000 a year by then is gonna be more like having 35 grand a year today. So even though it sounds like a lot, I feel like it could still make people feel very poor in retirement, and that's a problem. And that's why I just think that the stock market is like one of the biggest casinos in the entire world, guys, because that's everyone's retirement plan. You know, the traditional advice they tell everyone is just invest for the long term, do dollar cost averaging, have a 401k, invest in index funds, have a Roth IRA, and just keep saving and investing, and eventually you'll have enough for retirement. But I don't think that is true at all, because people right now who are between 35 and 44 years old, they only have about $97,000 saved, guys. So if you think living on 1.8 million in retirement is going to be a struggle, it's going to be far worse for most people. But kind of the going estimate right now is if you're a millennial and you want to retire by the time you're age 62 and have a comfortable retirement, you're going to need $3.6 million. And that just sounds like an impossible task, I think, for most people, guys, especially with what people earn today and how much you can actually afford to put away. And most of your budget is getting lost to the insane cost of living right now. And if you were able to actually do something like that, that would give you anywhere between 120 and 150K a year to live off of in retirement, which I think is probably going to be pretty necessary by the time we actually get there in the future. Like I said before, I think retirement is largely going to be something that's just going to be looked at in the history books as a golden age of opportunity for people who are fortunate enough to actually retire. Because if you just go back before the Great Depression, guys, nobody ever retired. People had to work for life, and you know, living conditions were tough just like they are now, and people were working 12, 15-hour days and just barely making enough to get by. Sounds pretty familiar, right? So retirement was kind of one of those things that people got to enjoy for a little while, but it looks like that whole thing is broken because the system in place that allowed that to happen doesn't exist anymore, okay? You don't have the companies giving generous pensions for life, and the pensions that do still exist are going bankrupt because of the mismanagement going on with them, or they're becoming underfunded, so not able to pay out nearly as much as they were promising to pay you in retirement, which can obviously prevent you from retiring. Let's face it, unless you have a nice sized pension, it's probably not enough to pay for the increase in the cost of living. Because if you had a $5,000 a month pension for life 10 years ago, I mean, that is fantastic, guys. Now, it's not nearly as fantastic as it used to be in terms of just being able to keep up with the cost of everything. So the antiquated system that used to work, that used to allow people to live a nice retired life is dead, okay? And it's all downhill from here. Now, real quick before I go, just on a personal note, I saw somebody ask me if I would ever consider moving over to the west coast of Florida because I was saying how much I like it and things like that. The answer is yes, guys. I would consider it. I love the area. I just love how much more relaxed things are over Miami. And let's face it, a lot cheaper too. There's really no congestion over there compared to here. It really fits my personality and lifestyle way better than living over here. We'll see. Maybe I'll end up over there. If you enjoy this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.